Guys, I hope you are well. It's Traders Pure speaking here. So guys, in today's video I will be continuing doing part 2 of how to trade SMC strategy, which is smart money concept, which is the strategy that I am only trading, and I have been trading it for over 2 years now. So from the previous video, guys, in part 1, what I was teaching you is about market structure, knowing how to identify your highs and lows, knowing how to identify your break of structure, and knowing how to identify your change of character, right? So I'm gonna brush up on what I was saying on the previous video, but I won't dive deep. I will just try to brush up so that we can get to be on the same page. So what I want you to focus on is to focus on this up arrow here, indicating that this is our uptrend. And I just want you to focus on this highs and lows that I'm about to point. Here we have our higher high. Here we have our lower low. Here we have our higher high. Here we have our lower low. Here we have our higher high. Here we have our lower low. And we are anticipating a new higher high. And focusing on a down arrow, we have what? Our lower low, our lower high, our lower low, and our lower high, and our lower low, and our lower high. And we are expecting a new lower low. So guys, understanding our swing points will help us identify what trend, what direction is the market moving in. In this case, I'm gonna draw that after remember on the previous video on part 1, what I said is that once a higher high is broken by a lower low, it is what? A break of structure. It is what? A break of structure. Same thing here. Once a higher high it is broken by a lower low, it is a break of structure. Once a lower low, a higher high it is broken by a higher low, it's what? It's a break of structure. And if you can just get to look at this trend here, it shows us that it's moving in an uptrend, right? So what's important is to time and predict where the market it is likely to react. You understand? So in this video, I'm gonna be teaching you about reaction points, which will help us identify our supply and demand level. So, and I'm also gonna go to the charts in the live charts to show you what I'm talking about. So if you can look at this higher low, it broke this higher high, right, and created a break of structure, right? It broke this higher low, broke structure, and created what? A new higher high. And this higher low broke this higher high, created a new higher low, so on and so on. But now I just want you to focus here. Wherever the market is in an uptrend, whenever the market creates a higher low in an uptrend, that higher low, it will be used as our future demand level. In this case, this higher low becomes a demand. This higher low becomes a demand. This higher low becomes a demand, right? Same applies on a downtrend, right? This arrow going down indicating a downtrend. Whenever a lower high breaks a lower low, it causes what? A break of structure. You can see that it was what? Our new break of structure. And same thing here. This was our new break of structure. And also this was what? Our break of structure. So as you can see, this higher low broke this lower low, creating what? A break of structure. This higher low broke this lower low, creating a break of structure. This higher low broke this lower low, creating a what? A break of structure. And in a downtrend, after a higher low breaks the lower low, the lower high becomes a supply. As you can see here, this becomes our new supply. This becomes our new supply, which I'm going to indicate it in a red box. This becomes our new supply. So that's how we should always look on how to identify our swing points, so that it can give us our supply. We can know when our supply, we can know that after a break of structure, a supply, it is formed, or a demand, it is formed. So now let's go to the live charts, guys. I'm gonna clear up this. Okay. I'm gonna go to there. So I want us to focus from this low here, low, to this high here, right? So from what I've been teaching you, now I'm gonna show you on the live charts how it is. First thing first, you need to identify your swing points. So by identifying your swing points, you're gonna take your brush and mark your swing points here. And let me do this. I'm gonna use this dot. I'm gonna try and so first thing first, we're gonna identify our swing points by marking them off before we draw our breakoff structure, which is this thing. I believe it will help you, especially if you are beginning. You understand? So by identifying your swing points, right? So it's my what? My higher high. There's my what? My lower low. There's my what? My higher high. There's my lower low. There's 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 my higher high. There's my lower low. And there's my higher high. And there's my lower low. There's my higher high. There's my lower low. There's my higher high. There's my lower low. There's my higher high. So I'm gonna mark them off, and when I'm done, I'm gonna show you the power of marking your swing points. So we cannot argue that this is what? It's an uptrend, right? This is an uptrend. It's a trend that is pushing bullish, you understand? So after we mark our high, our swing points, that's when we can use what? We can draw our breakout structure. As you can see, this higher low broke what? This lower low, forming what? A breakout structure. As you can see, we have our breakout structure. And what we can see that every time a lower low will react from something, you understand? Because if you can see, this lower low here reacted from this demand. Reacted from this demand, and after this lower low breaks this higher high, what happens? It creates what? It creates a break of structure here. Creates an up BOS, which is a break of structure. And then again, this higher high gets broken by this lower low. So in this case, it creates what? An up, a break of structure. Right? And again, this lower low breaks this higher high, forming what? A break of structure here. Forming a break of structure here. And again, this lower low breaks, this higher high gets broken by this lower low, causing what? A break of structure. Right? And then going forward is that this higher high gets broken by this lower low. No, this one, it doesn't get broken. As you can see here, they are equal. This high is equal to this high. So in this case, we have our equal highs here. So, and then going forward, is that we have now this low breaking what? This low. Okay, let me do this. Let me also mark my swing points here. We have this lower low, lower high, lower low, lower high, lower low, and lower high, lower low, and lower high. So as you can see, this high here, this lower low breaks this higher low. In this case becomes what? Our break of structure. And this also becomes our break of structure. So I hope you understand, guys. You do get my point on how I'm trying to show that by you first identifying your swing points and after that drawing your break of structures, it will help you to understand how the price it is moving. As you can see, same thing over and over again, you understand? So I think now I'm done. So back to what I was saying, that every time our swing points will react to something. Let's start from here. if you can see here, this swing point here, if I were to mark it like this, it was our demand. Look, price, it might not come, it might take time before the price come to your demand, but look at this. Let's say you marked this demand at your higher low after the higher low broke what? Broke the higher high, creating what? A lower low. This lower low becomes what? A demand. And in this case, you marked your demand here in this blue box. What you can see is that price comes here and mitigate this price. It reacts from this demand and it continues going up. And that's when from here you can take your entry here, which we have two different types of entries. We have a risk entry. We also have a what? A reduced risk entry. A reduced risk entry is when a trade comes to the demand like this, but instead of you entering, you wait for a confirmation. That is called a reduced risk entry. And again, as you can see here, we had demand here. Oh, you can see price came, reacted from this demand, and then it went up, and then again it failed. So we had a demand failing there. That means this demand didn't have power to push price to the upside. Same thing here. We had a demand that price came and reacted here. As you can see, there was a consolidation here. There was a battle from the bulls and the bears fighting. The bulls were fighting to hold price to push it up, but the bears overcome the bulls. So in this case, we had what? A demand failing here. So same thing, guys, over and over. Remember, after the price break structure, what broke structure? The low or the high that broke structure becomes what? A supply or a demand. Right? Same thing here. Our swing lows becomes what? The reaction points. If you can see, we had price reacting here, and also reacting here, being as a triple bottom, which reacted 3 times. So now I'm changing something here. I just want us to focus on a bearish trend. On a bearish trend, what you will see is that if we have our lower low and our lower high, our lower low and our lower high, and our lower low and our lower high, what will happen is that we're gonna have this reaction point being our supply, and you will see that when price gets to that supply, it reacts. As you can see, price came to this supply and then it reacted. You can catch sells here, which in this case will be short-term sells. You can catch sells here going down. You can catch this move and closing your entry when it hits the target. And again, now I want us to focus on a bearish trend. So I'm gonna try to look for a bearish trend here. Now, as you can see here, from this point here, from this high here, we're gonna now be focusing on this leg, going down, giving us our what? Our downtrend. So first thing first, before anything, we mark our swing points. Then I'm gonna take my tool to mark my swing points. As you can see, we have our higher high, our higher low, our higher low, our lower 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 low, so on and so on, guys. We're marking what? Our swing points here. We're marking what? Our swing points. Right? And after you mark your swing points, what do we do? That's when you draw our break of structures. That's when you're gonna draw your break of structure here. You're gonna draw your break of structure here. You're gonna draw your break of structure here. Gonna draw your break of structure here. You're gonna draw your break of structure here. Any downtrend. And after that, remember, what caused the break of structure becomes either what? A supply or a demand. So in this case, we are in a downtrend. So what caused the break of structure becomes what? Our supply. So if you can see, this becomes our supply here. And this also becomes our supply here. And this also becomes our supply here. And also this becomes our supply here. And in future, guys, price will come to these levels. You understand? Price will come into these levels and it will react. You understand? Look at what happened here. Price came into this demand, came into this supply. That was what was caused by this break of structure. And then it reacted, it went down. Look at this one. Price, what? Price came and reacted into the supply. And what it did, it went down, it sold. And again, price will still come to what? To this supply here. Will come to this supply. And then it will what? It will react. From those reaction points, that's when you can take your trades. So yeah, guys, this is part 2 of the video of how to trade smart money concept. I hope now you understand how to identify your supply and demand. You understand? So in the next video, which is going to be the last video, which is going to be part 3, I'm going to be showing you how to do the top-down analysis. You understand? From multi-time frame, starting from a daily all the way to the 15 minutes entry, which is going to be our execution time frame. So thanks for watching this video up until to this end. I hope you find value from this video, and cheers, guys.